Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So this week we have discussed a fundamental report few moments that we thought might be interesting to you. So because in general overall context remains positive for the gold market, we have very small amount of the news that particularly dedicated to the gold market. Mostly it's just is impacted by the same factors that we see on the other markets, particularly the sell-off that has happened on Monday. And it seems that the major background for the gold currently is overall major risks, geopolitical, global economy risks, currency risks, and so on. So it's becoming less gold-specific factors, but more stands on the impact of the global factors, political at the same time. And today we just have taken a look at the few moments that mostly were ignored, have been ignored by the big media in the recent few weeks, but still we think that this is really important for the gold market, and you do not know that, and it might be interesting to you. At the same time, if on the fundamental background everything is more or less clear, on the technical background and short-term perspective, we have few really tricky moments on the gold. First of all, on the weekly chart, recall that we have some bearish grabbers in a row. All of them stands in this area. So I could show you on our retail broker chart. Here on the COMEX chart we have just 2. Here we have 3. But it actually doesn't change the overall situation. So, and it's difficult to call it as occasion, right? So, because in 3 weeks almost in a row, we've got this grabber. Well, all of them suggest the action somewhere in the bottom part of this consolidation. It's around 23 area. We will see. Of course, any big geopolitical event could just erase these patterns, but we're taking a look at the current situation that we have right now. So this first moment that we have to keep in mind. Now dropping further to the down to the daily chart, we see that here is also very tricky combination. You do not see it on a retail broker chart, but if you will take a look at the COMEX futures, you will see on the daily chart that we have indeed opposite grabbers. On the daily chart, trend remains bearish. Together with the weekly grabbers that we have, it makes sense. So we have to be very careful and keep an eye on the precise patterns that are forming on intraday charts to identify in an early stage the possible direction. So this is actually our task for the coming week. Because we can't trade directly on the daily chart, we have opposite pattern here. But as I will show you a bit later on the hourly chart, situation is actually not as sophisticated and tricky as we have in reality. First of all, we have the clue on the cross-market analysis. If you take a look at the 10-year bonds, you will see the pretty nice really grabber on the daily chart. Now it's still a question how it's reliable, whether it will work or not. But at this moment, this grabber suggests drop of the yield and actually below the 3.65 area, which is actually significant. Actually, this grabber suggests raising the whole retracement that has happened in the previous week. I do not know whether this will be another sell-off or something, but definitely this makes sense. And this is definitely supportive for the gold. Besides, previous action on the gold was positive and it was really fast to the upside with the tail closing on Thursday. And it means that this grabber that we have, bullish grabber, seems stands in progress, right? So it's really big question what will happen with this grabber. The weakness of this grabber, actually, that market stands very close to its invalidation point. So it will be enough just minor upper direction and grabber will be raised. So this is what we also need to keep an eye on. And now we're coming to most interesting thing on an hourly chart. The market shows the price action that's really very attractive. Take a look by yourself. So you have remembered all this stuff, right? So if we'll take a look into the hourly chart, what we have. Friday trading plan was worked nice. So market indeed has completed the OP target that we have suggested and hits the agreement with the 24.35 resistance level. Now let's take a look what we have on the other side, on one side, on another side. On the bearish side, we have minor grabber on the daily. We have Gartley's cheapo to sell right at the 618 resistance level, and actually we stands at the agreement resistance by the Joe-Napoli framework because market stands at the OP right at the fib level. This creates very attractive opportunity for taking scalp short position. Because all the stuff suggests, well, at least the 30% retracement of this whole upper direction. So it might be more or less significant, or at least it's relatively safe to take the position here, because very soon we could get a chance to move it on the break-even. Later, you could see that it could turn to the hand shoulders pattern. That could actually give us some ABCD retracement. So that's that bears could think about, because overall combination very attractive. Market stands very close to the invalidation point of the grabber. It's very small risk of this trade. You just need to control the market stands below the stop. Once it will jump above it, everything is erased. So grabber is erased. This opportunity will be erased with the possible retracement, and could mean that market should keep going higher. And correspondingly, you'll get the answer on the riddle that we have currently on the daily chart. So since the market stands very close to this area, it makes overall combination interesting because of the very small risk. For the bulls, situation is a bit not as interesting because bulls have to wait. We have to either wait when this construction will be erased with this upward breakout, or conversely, we need to wait for retracement and control every support area on the moment of the possible entry and taking a long position. Although actually, for the truth's sake, if we'll take a look at this grabber, sorry, just fall off time from chart. This grabber suggests taking out to these lows, and it means the drop below 23.70. So it means that based on hourly chart, all this upward action has to be erased if this grabber will start to work. But to be honest, guys, I am tending to the idea that probably this grabber mostly will be erased, although not immediately, but after minor retracement. So some retracement will happen, but grabber hardly will complete its target around 23.70. Most probable that we'll get some moderate pullback and then upward action will be reestablished. It's most probable scenario that I'm just tending to this idea. So mostly it seems I treat it as the most probable scenario that could be formed. But still, we will not make any conclusions before we'll get real confirmation on the market. First, let's start Monday with this setup. If it will not fail immediately on the Monday's open, then probably it should work in some degree. And those who trade on intraday charts, you have the bearish view and your seems interesting with this setup, you could try to use it. And then we will see what will happen after that.